Welcome, everyone, to today's deep dive Cardano into the crypto markets. And you've joined because we finally get a moment of calm after a whirlwind week. And of you are feeling the same relief as the weekend arrives, offering a chance to pause and reflect on what we've just witnessed across the crypto landscape. Over the past several days, the market has been anything but predictable. But now we are starting to see a little bit of a cool down and some stability returning. Key information shared here is for educational and informational purposes only and should not be considered is not a financial advice. Cryptocurrency investments are highly volatile and involve substantial risk. Always conduct your own research before making investment decisions. Past performance is not indicative of future results, though the question remains whether we can sustain it, and more importantly, what the upcoming week may bring for traders, investors, and crypto enthusiasts alike. Today, we're going to break down not only the current charts, but also some intriguing leaked information that might help explain why the market has experienced such aggressive drops recently, while also highlighting factors suggesting that we could be on track for the fastest recovery in crypto history. First, let's look at Cardano, ADA, which at the time of recording sits around 27 cents early on Saturday morning Central Standard Time, marking a very encouraging recovery that began yesterday morning. It was genuinely exciting to watch ADA, alongside most other crypto assets, bounce back and nearly erase all the losses from the previous day, only to experience a mild cool down in the afternoon and some overnight selling, something that, as I discussed in my later ADA video yesterday, is perfectly normal, given that profit-taking is expected after such massive gains, especially since many investors were able to acquire assets at deep discounts just a couple of days ago. Bitcoin BTC had a stellar day as well, climbing to just above 71K at one point, though some profit-taking followed, bringing it to about $68,700 at the time of filming, which is a healthy consolidation within established support levels. But we'll need to observe how the weekend unfolds, as trading volume has noticeably decreased from around $300 billion in total crypto market trading volume. When analyzing Cardano more closely, one key level to watch is a prominent resistance line that was barely breached yesterday, representing a potential pivot point as we head into next week, supported by $330 million in ADA purchases even after Thursday's intense market drop. Meanwhile, Ethereum experienced some selling pressure, but nothing drastic, while regulatory news has contributed to a slight red tint across the market, with authorities reaffirming a ban in effect since 2021, denying legal recognition of crypto as money, classifying crypto-related businesses as financial crimes, and imposing restrictions on foreign crypto services, a reminder of the ongoing regulatory headwinds that can impact sentiment. Many of these recent market drops have seemed sudden and more aggressive than historical patterns, likely due to hedging strategies from private and institutional firms, with speculation that Bitcoin sell-offs were tied to hedges related to ETFs like BlackRock's IBIT and Morgan Stanley's structured notes, illustrating how significant financial maneuvers at large institutions can move the market in ways that individual investors rarely anticipate. Even so, there is considerable potential for capital to enter the market and buy dips, which brings us to one of the most fascinating observations. Bitcoin's entry into an oversold range has occurred faster than ever before, reaching this point in just 119 days from its peak, a dramatic acceleration compared to previous cycles, which took 217 to 364 days, and even 413 days to reach comparable oversold conditions, signaling that market cycles are compressing in duration. Similarly, the recovery period following these oversold conditions has been shortening. In the 2015-2016 cycle, BTC took 791 days to reach a new all-time high, while the 2020-2021 cycle required 735 days, and the current cycle only took 637 days, demonstrating that markets are adapting, recovery periods are becoming more efficient, and potential pivots are happening sooner than historical patterns would suggest. It's important to note that new retail adoption could have further accelerated this process. And although some analysts predict more downside, BTC potentially reaching 30K or ADA falling to 15 cents, these projections are not certainties. And history, while instructive, is not determinative, especially in a space as dynamic as crypto, where retail adoption, market sentiment, and external catalysts can dramatically alter outcomes. Past cycles have consistently resulted in new all-time highs, and although the current cycle lacked significant retail adoption, if those dynamics change, the law of diminishing returns suggests BTC's retracements may be smaller, and recovery times could continue to shrink, offering promising signs for investors willing to observe these evolving patterns carefully. So, if you found this deep dive insightful, don't forget to like, comment, and subscribe for more updates, analysis, and market insights that will help you navigate the ever-changing world of crypto.